fiscal stimulus plan, we believe, has been postponed, not canceled, for a number of reasons, including the calendar that Mike and Nisha were talking about in your last segment. However, this does not change the fact that we are on a sustainable recovery. This is not a double dip. This is not a death nail to the recovery, Kelly. We are investing as multi-asset investors with both an overweight to equity, which we've reduced a little bit as we head into the election, as we've seen profit taking in the tech sector, but we're still overweight. But more importantly, Kelly, this is a really good environment for credit, as long as you're picking your credits actively. And you talked about some of the sectors in that last segment. Yeah. Less has to go right for you to be right on the credit trade. And I think that's really important right now for investors to get as much carry or yield in their portfolio as they can to wait out the volatility and then to get back on the recovery story.
It certainly argues for picking carefully, like you're saying, Phil. So, Margie, I'll ask you if you share this optimism about the markets kind of as we move through this patch and believe that the recovery will remain intact.
Yes, the market is clearly indicating that the economy is moving ahead. We've rebounded very nicely in industrial production. And if you look at sectors that are interest rate sensitive, autos and housing, those are on fire. They're going gangbusters. And that is not the backdrop for an economy that's about to slip off the edge. So we're very optimistic about the economy.
Where would you put investors, Margie? Because a lot of what we've seen in the market this year reflects that.
I think you still have to stick with companies that have secular growth characteristics, in other words, the growth sectors, technology, healthcare, some parts of industrials. I think those themes are still going to play out. We really don't see the value play as coming in here because many of the sectors that have been depressed in earnings, we think will continue to be depressed in earnings until we have a lot more strength in the economy. So we're still sticking with higher quality, larger size growth stocks.